Well, Tesla numbers are out, and there are some really interesting details baked into the numbers that we've got to talk about, including recognizing $320 million of crypto gains that you're recasting from 2024, and some talk about the affordable model, but very little talk about ZEV credits. Going into this earnings call, I was most interested, which we can still get from the earnings call, in hearing what Elon Musk and Tesla's commentary is regarding zero-emission vehicle tax credits. That's because in this quarter, we had a 15% gross margin excluding tax credits, which is great, but we still had $435 of zero-emission vehicle credits that came in. That's because the big beautiful bill passed July 4th, which is technically the beginning of the third quarter, which is to say that Tesla did get the benefit of zero-emission vehicle tax credits for the entire full quarter, and those were represented in the earnings here. Now, most long-term Tesla investors don't really care about these credits, and they look at these credits as something that was bound to go away at some point in the future anyway. The question just becomes, what is Tesla going to go through in the way of a hole while we wait for revenues to appear for robo-taxis and the Optimus robot? Those are uncertain revenues, and so of course the big question now is, what do we go through? I'll draw that out for you as we go through some of these numbers. So if we have sort of peak vehicle deliveries here, and then what happens? We push this down with the loss of zero-emission vehicle tax credits. We lose the demand incentive of the $7,500 vehicle tax credit, or the 4K used tax credit, as well as the home residential energy tax credits. We push down our EPS for the corporation. This is the whole, but this is not what most long-term investors in Tesla are looking forward to. What we're hoping for is that we can actually push this up with the benefit of a Model 2 or a Model Q, some form of increase to promote or push up this whole, at least until we get to what, most of us think will be this long-term giant rocket ship of the Optimus program, and then obviously robotaxi. That's the goal. That's the simple goal for Tesla. The issue that we find is we don't have a lot of clarity on this Model 2. We only have a leak from UBS, which suggests that the Model 2 is actually going to be a Model Q, and it will only be for the Chinese market. For example, here we could see Tesla says we continue to expand our vehicle offering, including our first builds of a more affordable model in June, okay, with volume production planned for the second half of the year. The issue with this is the only indication we have of really a new model is the potential Model Q, which would only be dedicated for the Chinese market, which is really an electric vehicle market that was set up by Tesla and is now being competed against. In other words, the Chinese auto manufacturers are directly, with the support of their government, competing against Tesla, which kind of sucks, but it is what it is. Tesla got a great head start over there, and it was obviously, Shanghai was a game changer for Tesla, especially in terms of global deliveries and expansion of the Tesla brand. The broader issue that we have is in the financials during this little hole that we're going through, right? This whole period right here, we don't know what point this is. This point is a question mark. We hope it's 2027, 2028, cyber cabs, robo-taxis, whatever. But we don't know. That's an uncertain future. And then here we are, you could argue 24, 25, where we have this uncertainty in terms of deliveries, and we kind of just have to hold our breath between this hole. The concern you want to pay attention to is right here, $320 million. This is a $320 million income addition. And the footnote says that this was as a result of the new adoption of the crypto asset standards, which basically allows them to now indicate that rather than only recognizing losses, they can also recognize income. So they basically went back, changed some of their financials to follow the law, which is fine, but it did give them a $300 million cash gain. And that's because crypto assets could be considered part of their cash balance, which they've got plenty of. The issue with that is when you look at their cash flow, their free cash flow missed substantially. We only had $145 million of free cash flow. The expectation was somewhere around $750 million of free cash flow. And if you remove that $320 million gain, you would have actually had a negative free cash flow read here. And that's only from that $320 million number. If you now also remove the zero emission tax credits at $435 million, yes, we would be substantially smaller on the net income level. We would be about half of the net income we had now. In fact, our net income now is about $1172, so $1.1 billion. Our net income would have fallen to about $611 million. So this is what I talk about when I talk about the hole. I'm not saying that this is bearish for Tesla forever. I'm just saying it's going through a hole, and what you really want to look for are insights from Elon Musk's point of view and his team that are saying, hey, here's what we're doing to get through that hole. We're releasing more affordable models. We're expecting a Model 2 in the US or whatever. That would be great. Unfortunately, really, when we talk about new models, what we find is that the current models are increasing in inventory. Inventory now at 24 days, up from an average of 22 in Q1, the highest in several quarters, frankly. In addition to that, the vehicle that drove itself to a customer's home did have a custom software stack in Austin, which a lot of people looked at that and were like, okay, well, we want this to be in sort of the broader release. Did it have different hardware? We don't know details on this, but this will be a future. I'm excited about that. It'll kill finally, hopefully, that $900 delivery fee or give Tesla some more profit. So, I mean, that's cool. Then test drives up 20%. I thought that was interesting because it could be an indicator that Elon Musk getting out of politics, like that negative political weight is starting to fade. But going back to the models, when we talk about launching additional models, we still really only find that when they say we continue to make progress preparing for the launch of additional models this year, our entire lineup is better with recent updates. Yes, we got the extended Model Y in length. We got the Juniper model, but we still don't have a new model. They've continued to tease this new model, but again, per UBS, we think that's going to be China only. If you look at superchargers, you're going to find supercharger growth is really starting to shrink, 14 to 18%. Not ideal. Tesla, though, relatively stable so far. Earnings call could obviously sway this dramatically, but markets were anticipating about a 5% below average volatility move on Tesla. So that we're hanging out here between this sort of 347 line and 318 line. Usually we got to move towards one. If they pull off this earnings call well, hopefully this will just be a clearing event and Tesla can move nicely back to its 347 level. That's the goal for Tesla. Now, keep in mind, I mean, you know me, I'm a big fan of the lines. And this morning, for example, we talked a lot about Rocket Mortgage because people were looking for the next meme name after Opendoor, which I cautioned against investing in Opendoor over the last 2 days because I said the rally was over and it is fizzling like crazy. People were looking at Opendoor and I said, hey, this sucker's probably going to bounce at 1598. Don't do anything pre-market. Wait to see if you get volume. This is in the Meet Kevin Alpha report. We do it in the pre-market. So when we look at euphoria like this, we could look at a stock and I give you my thoughts on how it might move on the day. If you want to get access to that, make sure you go to meetkevin.com. Use the coupon code release the files or AI boom. They both work. But you could see this incredible bounce here, basically 5 times on the day on the exact line that I talked about in pre-market. So that's one of the big benefits of the Alpha report is you kind of get a heads up on what to expect for the trading day, what lines to look for. And then my goal is to teach you, hey, look for volume to know if these bounces are actually going to hold. That's the whole point of the Alpha report. So make sure you get that at meetkevin.com. Going back to the Tesla Q2 report, we find that we also have this decline in energy generation and storage revenue. Now, this I found very interesting. To me, there's a bit of a price war going on in solar, mostly because energy prices are coming down, whether that's because we're producing more oil and natural gas, or it's because of lower international demand because of tariffs or in spite of tariffs, whatever. We're seeing energy prices come down. And in order for the home battery and solar market to do well, you need tax incentives, you need high utility rates, and you need low interest rates to finance these projects. Unfortunately, we have the complete opposite. We have very high interest rates, not low interest rates. We have falling utility rates, not rising utility rates. And we're losing tax incentives for these batteries and home solar products, which is unfortunately an L that's leading companies like Tesla and Enphase now reportedly making cheaper products to still try to maintain some margin. And this is where Tesla actually impressively increased their margins, but lowered their average selling prices on these energy products to get them sold. Now, the Enphase earnings call will give you a lot more insights into why this industry, like the solar and battery industry, is just a toxic waste basket right now. And it's one really, at this moment, unfortunately, to be very, very cautious of. You really have to have balls of steel to make a bet on the solar industry right now. But it is still impressive that Tesla's able to squeeze those margins. And I like that Tesla's able to push a 15% margin, excluding those credits. Now, we still got development listed here for the Roadster. We've got the Tesla semi-truck in construction along with the Cybercab. So the lines in construction here. You don't see a new model otherwise listed here. And they still indicate a Cybertruck capacity of over 125,000. But it's highly unlikely we're anywhere near that sort of delivery volume. So yes, a miss today. We did have some cool images. Look at all these ladies, these pretty ladies here on their roller skates showing off their 1950s style diner. We've got the hole that we've talked about. We talked about, I don't know if we've hit this yet. Tesla is cash rich right now. While XAI is blowing money, expected to blow about $13 billion this year, one of the reasons Elon Musk is promoting this idea of Tesla potentially taking a stake in XAI is because Tesla is pretty cash rich right now. Even if you net out their current liabilities of $26.8 billion of bills to pay, they still have about $10 billion of extra cash, plus another almost $14 billion, that was $3.8 billion of accounts receivable. So that's about $40 billion of cash, plus $14 billion of inventory. So $40 billion of cash, plus 14 of inventory. You're doing really well here in terms of cash situation if you've only got $26 billion of current liabilities and 11.5 of total long-term liabilities. You could literally take all the cash you have and make this company debt-free. And then you could go do the debt scream, debt-free scream, or whatever you want to do. Anywho, this a little funky again with the 320. We've talked about that. But that gives you like an overview of what's going on with the Tesla numbers here. And remember to go to meetkevin.com and use those, release the files coupon code.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.